Hi, it's Dre Griggs with Obsidian Wisdom. Today we discuss DeepSeek AI and the impact on the stock market. So if you've been seeing, and I've been seeing it too, there is a stock sell-off. The stock market was going crazy and we're all trying to figure out, what does that mean for my retirement plan? And then if you turned on the news, you saw what I saw, where they're saying, hey, there's this new artificial intelligence company out in China and is named DeepSeek. And so as a result, the stock market is selling off significant shares of what we would call the Magnificent Seven, where the Magnificent Seven are the seven leading AI companies, or at least the seven leading projected AI companies, the seven companies positioned best to take advantage of this AI revolution. And you and I know that AI is everywhere, that it is being offered to everyone, that it's writing papers for kids in college, that is helping you put workout plans together, that is writing books for people, that AI is doing all sorts of things. And we're not sure if it's going to take away all the jobs or if it's going to help us. And we're just trying to figure out how the future looks. Well, when you look at the stock market, that is what they're trying to do. Think of the stock market like the odds makers in Vegas. I don't know if you've ever seen any sporting events, and they will be able to tell you all these phenomenal things where they'll say, hey, the Super Bowl, I think, for example, the line is 49.5 points. And what they're saying is they believe the combined score between those two teams will be right around that 49.5 points. And one of the guys I enjoy doing this is Scott Van Pelt. He's on ESPN. He has this segment called Bad Beats. And all he does is he literally finds events every single day, literally, think about that, every single day, that the number, the line, whatever it was, how much you're supposed to win by, how much you're supposed to have combined total, all these different things, that's down to the very last second where someone has a throwaway free throw. And then all of a sudden it's a bad beat. It went right over that line that the people in Vegas were able to determine. Or someone has a safety at the end of the game. And again, it's right on that line where you're supposed to win by 1.5 points or 2.5 points or 3 points. And then it flips it to where you went from winning the whole game to all of a sudden you lost because it ended in this crazy way. The stock market is sort of like that, except because we all have access to the stock market, it's not as precise as the Vegas gamblers. In Vegas, they have the mathematicians and they have the algorithms, and they're able to really be very precise. And we're not concerned as much about human sentiment. Now, they do move the line very small amounts if everyone is making certain bets. But when you look at the stock market is erratic. The numbers go up and down all the time because there's a variety of people who are not investing, but they're gambling. And because they're gambling, they're guessing what they think the future is going to be. And so what ends up happening, and is why we're probably going to have a lot of volatility if you really think about it, because you have to be able to predict what is going to happen in the future, which is why the stock market really enjoys things being predictable. They don't even care if things are going to be good or bad because you can bet for or against something. They can make money either way. But if they don't know what's going to happen, that gives us the stock market volatility. That leads you into what you saw when DeepSeek came out. The perceived assumption was whoever spends the most money and whoever has the best AI chips, whoever is furthest along, those people are going to maintain their lead because it's going to take so long to close that gap. That was the thesis statement for the stock market. As a result, the stock market inflated the values of NVIDIA, where you literally I could show you, and I will show you, it was January of 2 years ago. The stock was like $100. And then at the end of the year, the stock was $1,000. That people literally kept buying NVIDIA because they said, this is going to be the future. I believe NVIDIA is positioned to take advantage of the AI, and AI is going to generate billions, if not trillions of dollars. And this company, or these seven companies with Microsoft and Meta and Apple, where they say these seven companies are going to be the ones that will make the most money. And because they're huge and successful companies, because they're the largest companies in the US stock market, we're not concerned in the least about any future losses because these seven companies can't be surpassed. It's impossible. And you probably heard the Warren Buffett saying, it's well known, but he says that he's cautious when people are greedy and he's greedy when people are cautious. And what happened was DeepSeek came out and said that whole thesis statement, that whole hypothesis, that whole belief that you have is not true. What we did is we spent a tenth of the money, and I'm probably being generous because it was billions of dollars that was spent to create OpenAI and ChatGPT and all this other stuff with the fanciest processing chips and all this. And then the United States said, we're going to protect our leading position by limiting how much of these fancy chips NVIDIA is even allowed to sell to China. So that way we can protect the US as the AI revolution. And then Trump came out and said the United States is going to invest $500 billion into AI, billion with a B, because that was the belief before DeepSeek came out. The belief was whoever spends the most will win. Whoever has the best chips will win. So the United States built an entire infrastructure and the stock market baked that into the cake. Said, well, dang, if the United States has $500 billion to add to AI and the United States has all the best chips and they just made it illegal for NVIDIA to even sell these chips to China, the United States is number one and they'll be number one forever. It's going to be a great AI wave and the United States is going to ride off into the sunset of greatness. And what DeepSeek said is, hey, United States, what we did is we were able to spend a few $1,000,000 and we trained our AI in a matter of months, and it's actually very similar to ChatGPT. And we didn't use the fancy chips and we didn't have to use all the money. So the stock market immediately said, if this is true, then that means we have to rebake the cake. So we had this value that was baked into the cake. So now if this is true, it then means that all those US companies, they don't actually have this moat. They don't actually have this protection. They don't have the idea of Coca-Cola, which is first in. So Coca-Cola is literally phenomenally large. It's a conglomerate. And as huge as Pepsi is, it is a fraction of Coca-Cola. And there's not much that Pepsi can do to bridge the gap because Coca-Cola has what's called this economic principle of first in. If you're first in, normally that means that you are the biggest and the baddest, and everyone else isn't really going to be able to compete with your market share. Everybody knows your name, you have all the technology, you got all the fancy people, and we see that over and over again. We're with Google first in, and there's a lot more search engines, but they don't really hit like Google. And you saw that with Tesla, where they're first in as far as electric cars. People are like, yeah, I know that there's other electric cars, but I can't really name them. And so that was the thought. First in, you're going to have this advantage and the gap won't close. No matter what someone does, they'll always be behind you. So now if that's not true, if you can literally just start an AI, use weaker chips, save a whole bunch of money, and what they did was, which is pretty phenomenal if you think about it, what China's company did was it just trained its AI with ChatGPT. So you and I and a bunch of companies use ChatGPT. We build infrastructures off the back of ChatGPT, where you go to my website, it's going to ask you questions, and then the AI is going to answer it. Now, that's not literally on my website. It's just an example. Well, all of us are using it where we're interfacing with ChatGPT, and then it's running our programs for us. The China company DeepSeek said, why don't I just run my AI off of yours? Which is crazy if you think about it. So as a result, they train their AI to just ask ChatGPT all day, every day, a gazillion questions. And as you get the information, you will then be as smart as ChatGPT in a matter of months without us having to do the rest of that information, because it is learning. It's not thinking on its own, but it is learning. So if I just have you ask prompts all day, every day, in a gazillion a second, then all of a sudden you become smart enough where you close this gap. Now, has it closed it all the way? No. And I've seen different studies and they say that the DeepSeek, because it has slower processors, that it's a slower answer. And you're like, okay, but it's still a relatively quick answer, where if ChatGPT is maybe 5 seconds or 3 seconds, maybe it's 10 seconds for the DeepSeek. And I think I read or saw where if you ask DeepSeek, hey, who are you? That it will say I'm ChatGPT 4.0, because it was trained to be just like ChatGPT, which is interesting, right? It's very interesting. So this open source data, we're able to take this stuff, and then I think they piggybacked it off of something that Meta put out, where their AI and their open source data. And then that brings us back to the stock market. If you saw NVIDIA and these other Magnificent Seven get this value based off of something they have not done yet, but is in the future, that is gambling. That's speculating. That's guessing. As a result, if I guessed wrong, I'm worried about losing a whole bunch of money, so then I sell off. I just cut my losses and I leave immediately. Or maybe I just lock in my wins and I leave immediately, because we're speculating. So any news changes my philosophy, my thesis, because I wasn't investing. I did not make a decision based off of the facts and the information of the company. I made it based off my guess about the future. And my guess might be right, and my guess might be wrong. And when you look at DeepSeek, the way I would describe what they're doing, it would be very similar to, and I remember reading about this, where Walmart spends millions of dollars finding the perfect place to open their Walmart shopping centers. And I read that Target spends not as much because they just follow Walmart. So if I found out, right, if I'm Target and I found out that Walmart spends millions of dollars deciding where they're going to open, I read the same thing about McDonald's, the same idea. They spend millions of dollars finding the exact perfect place to open a McDonald's. Then I'm just going to open my Burger King across the street. Because I know that you spend all the money finding the best place, so why am I going to spend all the money finding the second best place? I'm just going to open across the street, which is what they do. And so you have Walmart come in, and what do? I just open my Target across the street. I know you already found the best place, Walmart. I'm just going to open across the street from you. How does that sound? And you see the economics all the time where companies aren't very interested in the research and development. I remember reading about that with Mac as well, where the Mac people, they would send people out, they would train you on how to use the MacBook and all these things back in the 80s when it first started. And then someone else would say, well, the Mac guy trained you on everything. How about I just sell you our PC and it's like a third of the price and you've already been trained by the Mac people. And they'll be like, oh, okay, that sounds good too. And so DeepSeek might be doing what we've seen happen a lot, where if you're Uber and you're out first and you're crushing it, why not just open my own Lyft? You already got the infrastructure in place. I'm just going to basically do what you do, and I'll just have a little bit of a lower price, but you did all the hard work for me. And when you really think about it, you can probably think of a variety of times where it happens, but for some reason, people felt that AI was going to be different, that there wasn't this idea that I could just do what you do for a lower price, or I could just do exactly what you do next to you. And I may not make as much as you, I may not be the best, but I'll be really close. That you may feel that there is a difference between Wendy's and Burger King and McDonald's, but you probably wouldn't feel like it's a huge difference. You might feel that there's a difference between Target and Walmart, but you don't feel like there's a huge difference. You might even feel that there's a difference between Pepsi and Coke, but you don't really feel like there's a big difference. You get what I'm saying? And so when you look at the stock market like that, where they assumed that they were going to have these 7 companies that were going to be the best companies, they're going to take in 60% of the AI revenue for the next billion years. And then they found out maybe the moat isn't that deep. Maybe they only will have a small head start. And worst case scenario is, well, if DeepSeek did this, and that's a Chinese company that has certain restrictions from the United States, what's to stop an American company from doing it, a new, smaller one that we haven't heard from? And so now people are saying, well, if you don't have a moat, you don't have any protection, and we guessed what we thought these companies would be worth based off of our projections of their moat, the ability to be first in and first movers and you have the best opportunity. Well, that's what caused all the stocks to sell off over the past couple of days, because you have to basically reset yourself and then start over with your new guess. But that's only if you're speculating. If you're investing in the company based off of what it has done, past 5 years, 10 years of earnings, yes, I see the projections for the future, but I'm going to do what we call a margin of safety. I'm going to take the number that you gave me. I know that you're thinking best case scenario. You want to look really good on the stock call. So then I will take maybe half of that, maybe 75% of that. And then I'll say, okay, so if you're half right, would this be a good price to buy the stock at? If you're only 75% of the way right, would this be a good price to buy the stock at? And if you make that decision, then you won't be out here going crazy in the future, because believe me when I tell you, and I don't say this with any emotional feelings or ties either way, just simply a factual observation, because there's going to be a lot of uncertainty in the future. There's going to be a lot of things changing. The calculation that was used for a lot of these things in the stock market is going to be adjusting. We're going to have a relatively volatile 2025 and 2026, if you ask me, and in my humble opinion. And that's why I believe, and I just had seen that today, the Fed announced that they were going to pause on the interest rate cuts because it's so volatile. We have no idea what's going to happen. We wake up one day and the administration said we're going to pause all federal spending. And then you wake up the next day and they said we unfroze the federal spending. Well, the stock market is trying to figure out, well, what are we going to do? What's going to be long-term? What's going to be short-term? We're moving out of different organizations where we left the Paris Accords and the WHO, and then we paused different regulations for the government. We're talking about the people going back to work. It's just a volatile time. We don't know how everything's going to happen. There's going to be a lot of stuff that's going to be in court and is going to be settled in the future. And because of that volatility, we don't know what's going to happen on the court date. Does the executive branch have the ability to do everything that it's doing? I don't know. And because you don't know, it makes it hard to be a gambler. It makes it hard to speculate. That ultimately, you really have to go back to the facts of the matter and look at companies based off of what they have done and what they're positioned to do, and historically the patterns that we notice about the industries and the sectors. If you are in the business of guessing the future, I'm telling you, it's going to be a very difficult proposition to be able to do for at least the next couple of years, because we just don't know. And that'll do it. I just want to come on, share my thoughts. I was giving some clients a call. They were asking about it. They were concerned about it. And I said, why don't I just put out a video and just share it with everybody where we can discuss it together. If you have any questions, feel free to leave them in the comments. Ask me. I'll do my best to make a video answering them. But as always, I'm thankful for your time. If you enjoyed this, go ahead and subscribe. Turn on the notifications so you continue receiving valuable insights, how to create your own wealthy retirement system. Until next time, stay safe and enjoy life.